Most entrepreneurs do not have an income problem. Actually, they have a decision problem. They make money, but they don't keep it. They don't protect it or turn it into something that really lasts, even perhaps to a legacy. So here's the real question. How do you build wealth that works in every market, not just when things are easy? Well, welcome to Raising Private Money. I'm your host, Jay Conner. And today you're going to hear from someone who doesn't just talk theory, he actually engineers outcomes. My guest is Mark Murphy. He's the CEO of Northeast Sequoia Private Client Group. And that's where he helps entrepreneurs, he helps business owners, high-performing professionals build multi-generational wealth without relying on guesswork or hope. Now, Mark is known for combining financial engineering with something most advisors ignore, emotional fitness, because money decisions are rarely logical. They're most always emotional. Now, Mark's been ranked by Forbes as one of the top financial security professionals in the country. He is the number one best-selling author and hosts the top-ranked podcast titled The Hero of the Hour. Today, here on the show, we're breaking down how smart investors think about capital, think about risk, and wealth that actually last. Right after this, you're going to meet my guest.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Mark, welcome to the show.
Thanks so much, Jay. I'm so happy to be here live on Facebook.
Well, I'm excited to have you. You're going to be here on the podcast, Raising Private Money, live on Facebook, YouTube, LinkedIn, all of our different audiences. So I'm excited to have you on, Mark. Let's go ahead and dive in. Most entrepreneurs think that raising capital is about numbers. Now, you talk, Mark, a lot about this phrase that you call emotional fitness. Here's the question. What is emotional fitness, and how does emotional decision-making actually impact someone's ability to attract and keep private money or investment capital?
Well, I think the number one job to me of what I do for a living, Jay, is you have to help the people make not emotional decisions, but rational decisions. I think ultimately that's why they put all those impulse items at the front of the cash register in those stores. And you buy those stuff where you're waiting online to pay to get to the cash register, and you buy that stuff and you get it home and say, well, why do I need it? And I think that the idea is that investing, and particularly real estate investing, can't be emotional. It has to be, you have to be making thoughtful decisions, because emotional decisions oftentimes are the wrong ones.
I agree. Most people make decisions based on emotions, and then they try to justify it by logic, right?
Yeah, absolutely. One of the things is, whether you're raising, when your audience with people that are either raising money, or there are people that out there are just looking to deploy money in the real estate market. I think ultimately the way to create multi-generational wealth, and I'll speak to the first audience first, the people that are raising money on this business. I've always said, if you have $1 and only $1 to invest, the best place to entrepreneurs invest that money is when they invest in themselves. So if your business is the real estate syndication business, or something in that, let's call it neighborhood, I would put all of my money there, not only in terms of my return on time, but my return on money in terms of investing in marketing or other things to get in front of people that are investors. And for the folks that are looking to deploy capital, I think there are really only two investment classes. Now, somebody who manages billions of dollars like I do knows there are dozens and dozens of classes. But we think for our purpose, there's only really two. And we call those paychecks and either free capital or play checks. And so I think one of the ways to create real wealth, and in most cases, multi-generational wealth, is to be able to have a series of assets that give you a guaranteed or highly reliable stream of income to replace your income at your job or your business. And I'll call those paychecks. But then I think you want another series of assets where you can spend it, you can save it, you can give it away. But the important thing is it will not be responsible for producing income for your family. So if you have both paychecks and playchecks, that's financial freedom.
You know, I've had over 800 guests on raising private money. I've never had anybody actually identify those different types of paychecks. I love it. You advise high net worth individuals is part of what you do. And my question is, how is it that you advise them, and what is it they're really looking for before they say yes to an investment beyond returns and spreadsheets?
I think generally, in general, you start first by not investing in the project. You're investing in people and people that you trust. And I think particularly in real estate, you have to be cautious because it's not a risk-free investment. If you want risk-free investments, you should buy treasury bills or CDs under $250,000 or cash value life insurance or something that is a very a very stable kind of asset. I think in real estate, you have to really understand what you're investing in. Do you have, and I think that, it starts with, are you in first position on the loan? Is it a mezzanine debt deal where you're at the highest risk? Is it just a debt deal? Is it an equity deal? And I think part of it is for folks is they've got to have people that they can trust if they're not savvy investors. Of course, I'm sure they have to be accredited investors, but assuming they're not savvy real estate investors, I think they really need someone that can take them through not only who the people are, but what they're trying to do with this project. Because, I've seen, as you probably have, Jay, I've seen some real estate deals that were, very, very, very solid, relatively low risk kinds of opportunities. And then I've seen some things that were very, very, very risky, like trying to find the needle in a haystack. And even with having said that, you also have the risk that when the market goes upside down, the market goes upside down. Leverage is only good on the upside, Jay, as we all know.
So let me ask you this question, Mark. Let's speak to the people that are looking to raise capital for their real estate deal or deals. How should someone like that's looking to raise private money think about protecting their investors or private lenders' capital first? And what is that? How is it that mindset unlocks more funding long term?
I think that anybody who takes money from people has to treat that money like it's their own. One of the things I like is I like when those people that are raising capital are also putting their own capital side by side with their investors. So the idea to me is that, Jay, if you said to me, I'd like you to put $500,000 in my next deal, and I knew you had $1 million of your own capital in the deal, that'd be one thing that would make me feel good about it. The second thing is I'd like to understand and really really understand what your track record is. I'd like to understand how your what the project is, how much leverage you're using in this deal, what is the investment, what's the strategy as part of that, and I also want to know what you've done to guarantee that I'm going to get my money back. Maybe I don't make a lot of money if the deal doesn't go sideways, but do I at least get all or most of my capital back?
Yes, I'm the same way. I started raising capital for real estate, my own real estate deals, all the way back in 2009. And as you alluded to, I treat that money from my investors as though it is my own money that I'm putting in my deals. I never borrow money that's unsecured. We give all of our lenders deeds of trust and mortgages on the real estate to where they're totally protected. Now, you work with entrepreneurs, you work with athletes, you work with hedge fund managers. My question is, what is it that separates the way you advise or the way these elite capital investors, allocators evaluate deals versus, say, maybe the average investor evaluates deals?
First of all, I think it's who you surround yourself with, meaning our chief investment officer here. And by the way, we do not, I invest heavily myself in private equity and real estate deals. I only invest our clients' money in public deals. We're not recommending private transactions as a registered investment advisor. But I do think that somebody who probably invests almost on a monthly basis in real estate myself is I'm always looking for, I'm always looking for myself. At this point, a lot of people are looking for flips where they're looking to make money on their money and send it back, a year or two or three or four later. At this point in my life, I'm looking for recurring revenue. And so the idea is I love, rental deals, and I love deals where, not only will I get a stream of income on my money going back, but getting that money in almost perpetuity is something that's very, very attractive to me. And so I think it's also very, very different for each person. I also think when you put your money at risk in real estate, I think you also have to ask the following questions that we ask our clients all the time. Is we will ask them the following. We'll ask them, if you put this money and the deal goes to zero, does that affect your lifestyle? Do you still keep your house? Do you still keep your kids in school? Does your retirement goals change if you lose this money? Can you afford to lose it? If the answer to that is yes, then they can at least go to the next step of evaluation. The other kind of question you also ask them is, they said it's a 5-year deal. Well, if that deal, goes sideways and it turns into a 10-year deal or a 20-year deal, is that going to be okay as well too? And I think that the idea is, I think that there's too many people that are where they run to the greed, and they're putting money that is at risk, when they think it's not at risk. And I think that ultimately that's why I think the government gave us accredited investors. But I think for our clients, it's really people that they're investing with money they can afford to lose.
That certainly makes sense. One thing that, as I read about your core values and your background, and you just got a lot of great stuff going on, and you got a great reputation in the marketplace. One thing that you emphasize is building wealth that lasts for generations, generational wealth. With that in mind, how would you advise someone that's looking to raise capital to structure their relationships today so that their investors or their private lenders stay with them deal after deal after deal?
Well, I don't think it hurts to have a successful deal, the first deal or two. I think that people want to be around people that are very, very successful. And I think that one of the things I worry about with people that are raising money is the ones that are too successful in raising money. I worry that they have capital to deploy and not enough great projects to deploy. And so one of the things that I do appreciate is investing with people who are not what I'll call, are not pigs about it or huzzas or whatever you want to call it, where they say, I've got all this money, I've got to deploy it, that they'll either return that money or they'll keep it in cash and wait for a great deal to come. I always appreciate that, as opposed to I'm sitting on all this capital. People are expecting me to put it to work. I got to put it to work now, even if I don't have great deals. And I think that that's why you have to know who you're investing with and trust the people you're with.
That makes sense. A lot of operators, real estate investors, what I have observed, when they're looking to raise capital for their real estate deals, they're chasing the capital, and you're going to know what I mean by this. They're chasing the capital instead of first becoming, quote unquote, investable. And you know what I mean by that. With that, what would you say are the key traits or characteristics that you would see in someone to where people that want to invest their money or loan their money would be seeking them out to loan their money to or invest their money with?
I think that if you don't have the real estate or you don't have the expertise in the business, you've got to partner with somebody, especially in the beginning. And I've seen a lot of our clients who are in the money raising business or in the real estate business. They started out, I'm not saying as apprentices, but we've had a group of folks that could raise capital and had access to capital, but they didn't have the expertise to run the projects. And I think what they did is they partnered with one or more different groups and really almost went to school until they got to a place where they felt confident that they would not only put all of their money at work, but all of their friends and families and all of their customers' money at work, and do it with confidence. And I think the idea is that, it's almost like, the joke always is when every dentist gets into the real estate business, that's the time to get out. When everybody becomes a real estate developer or a fundraiser of money, I think, that's a sure sign of the apocalypse.
I couldn't have said it better. Now, let's zero in on you, Mark. Your day-to-day activities, your clients. First of all, how would you describe your ideal client that you like to work with?
I'll put it this way, Jay. I like to do three things every day. I want to help as many people as I can. I want to create as much wealth and abundance in the world as possible. And I just want to have fun working with high integrity people. So that's what I want to do every day. So I'm generally working with people that are big thinkers, that like to reciprocate, that appreciate our expertise, that are loyal. And I probably go through, a half a dozen other things of our ideal clients of how we like to work with people. But I think the idea is that, I don't think I've ever worked a day in my life. And so if I can do the three things I said, that doesn't seem like work. It's not a day at the office. That's a day of joy for me.
Well, Mark, admittedly and candidly and totally transparent, I have come to the age in my life to where sometimes, every once in a while, someone will say, well, Jay, are you thinking about retirement? Are you thinking about slowing down? And my answer is, what in the world are you talking about? Retirement? I mean, what's the definition of retirement? What do you want me to do? I don't play golf. You want me to sit at home on the sofa and eat Cheetos? I can only handle so many hours of Fox News and Fox and Friends, and the reason I'm sharing this is because of what you just said. Never worked a day in my life. Well, mine's a little bit different. I worked in the corporate world until I was 43 years old. I'm 65 now. And when I turned 43 years old, I found myself having the opportunity to be the entrepreneur all the way. And so since that time, like you, Mark, I do go to work. In fact, as it goes, I'm probably working harder today than I ever have before in my life. But like you said, I don't think of it as work. They say, well, this is just what I do. I've reached a point in my life to where it's all about serving, having a servant's heart, making an impact. And, when you're doing what you want to do, it just doesn't get any happier than that. I've been a guest on over 800 podcasts as well. And they'll say, Jay, if you could go back and change anything or, give advice to that, 21-year-old self, what would it be? My answer is always the same. If you're not happy doing what you're doing, then fix it. Life's too short. Not to be doing what you're happy doing.
I love that.
So what would you say is what sets you apart from other people that do what you do?
One of the things that I did is when you have I'm an NFL registered player financial advisor, and many of our NFL clients have non-guaranteed contracts. The average career lasts 3.5 years. Most people either in the corporate or the entrepreneurial world, their careers last 20, 30, 40, sometimes even 50 years. And I think there's almost no reason why people who are willing to take our advice can't create not only multi-generational wealth, but a life by design. And what I mean by life by design is I just watched over the Christmas holidays, It's a Wonderful Life, one of my favorite movies.
I watch it every year.
I think everybody would agree that Mr. Potter had multi-generational wealth, but nobody wants to be Mr. Potter. If your wife or spouse hates you, if your kids are miserable, if you're miserable, if you don't have your health, who cares how much money you have? And so one of the things, in fact, I've got a fourth book coming out next year that I'm just finishing. I'm working with one of the senior writers at Sports Illustrated, Ryan Phillips, and I are co-writing it. It's about creating multi-generational wealth and a life by design. But I've put together a financial integrity scorecard of the 10 things that you need to know to be able to create multi-generational wealth. And I score those 10 things, like 1 being red, 5 or 6 being kind of yellowish, and 10 being green or optimal. almost like a traffic light in trying to continue, because there's no such thing as perfect, but getting those 10 financial integrity scorecards and items to a 10. And I think if you can get those, if you can even get a score of 70 or 75 or 80, you've got a heck of a good shot of creating multi-generational wealth and a life by design.
So what's the name of the book and when's it coming out?
Well, we're just finishing it right now. We've just got the first draft done. We had our third book was, number one on Amazon last year. And I think it's going to come out this year. I'm not sure when it'll be published. I think my guess is it probably comes out sometime in the third or fourth quarter.
Okay.
It takes longer to write a real book than it did. I get through all the publishing and all the edits and all the compliance.
Hey, look, you're not kidding, Murray. My national bestseller, Where to Get the Money Now, took me 3 years. I mean, these companies that come along and say, oh, you can write your book, in a weekend, or you can hire a ghostwriter to write it. Real books take a long time.
Yeah. The other thing I find for a guy who writes books for a living, you know what? It's so interesting. People sometimes have read one of the books I've written, years ago. My first book was on mergers and acquisitions. And this last book, The Ultimate Investment, was there. And, it's so funny. Like sometimes when the book comes out and people talk to you about what you're writing with a book, you're almost caught back for a minute. They take you back because that was my thought process 4 or 5 years ago. And it's evolved since then. And I'm thinking about something at a whole new level, and the other thing I have to point out is something you had said about when you're going to retire is it's very clear you can stop what you're doing, but you can't change who you are. So I think, I'm going to sneeze. For guys like us who are serial entrepreneurs, your mind has to be in creation and fascination mode, or we're miserable. And so I don't ever see retiring either. I just I may be doing some things differently. I may be, the trick that I've always used, Jay, is about every 6 months or so, I get a piece of paper and I put a line down the middle and a T at the top. And I've been doing this for about 25 years. I write on the left side all the things I'd be doing in retirement I'm not doing. And on the right side, I write everything I hate about my business. And I try to add something to the left side and get rid of something on the right side. With the theory being, if you're doing all the things you want to do and not doing the things you don't want to do, who retires from that? Why don't you retire today? And that's been my mantra for 25 years.
Yeah. When I'm a guest on podcasts, every once in a while they'll ask me, they'll say, Jay, what's your definition of success? I say, that's easy. What's your level of happiness? I mean, success to me has got nothing to do with how much is in your checking account, because I have got a lot of friends that have had multi-millions and millions of dollars in their checking account, and they're miserable, right?
Well, I think success is doing what you want to do, when you want to do it, with who you want to do it with.
And for how long you want to do it.
Exactly. I don't think there's a perfect answer for any of that, but I think the idea is that ultimately, it goes back to, and I know your show is primarily about real estate, and I think real estate is one of the most important asset classes out there. I believe that, that clearly is. But I think ultimately you got to break it down even more simply. There's only 3 things you could do with your money. You could save it, you can pay your bills, or you could spend it like a drunken sailor. And if you don't save first, no matter how much money you make, there'll never be any money to save. It's about focus. It's about discipline. And the other thing that I think is a pet peeve of mine is you got to pay yourself first is number 1. I think number 2, though, is it's about liquidity too. Sometimes I'll even see, Jay, guys with incredible balance sheets, but they couldn't write a check for $3. It's all in illiquid assets. And I think that unfortunately in life, there's opportunities and there's emergencies. And cash becomes king at both of those times. And I think people are still underwhelmed in cash. And then I think people also, they don't look at a few other things. How do you minimize taxes? How do you create an alpha tax strategy? So many people are just paying maximum income tax, maximum sales tax, maximum tax of all kind, which, I'm not saying you want to do anything that's not legal, moral, and ethical, but there's a lot of things in the code, particularly around real estate and other items, that allow you to legally pay less tax. And then I think, on top of that is, it's also about, global debt restructure. It's about liability protection. Don't tell me you don't have any life insurance or disability insurance, or your companies aren't in separate LLCs. Don't tell me you don't have any, medical insurance, or you're not insured your properties properly, et cetera, et cetera. I hate when people discover how little their property and casualty insurance is when there's an earthquake or a fire or a hurricane or a flood. And that's the time they discover they don't have the right insurance. So, I think there's a lot more to it than just, I'm going to put my money in this project, or I'm going to raise money and it's there. There's a lot of things you got to do to really be a professional in this world.
Absolutely. Mark, what would you invite my audience to do?
Well, first of all, I'd invite them to have their very, very best life. The idea to me is I just, at this point in my life, as I said, the first thing I want to do every day is help as many people as I can. So I would welcome the opportunity to help any one of your listeners who would love to chat. But I think the second thing is, regardless of if we don't get a chance, I just want to wish you and your family that 2026 is the best year of your life. And life is a series of S curves. And I hope that this S curve that you're on currently is the very, very best that life can bring to you and all the people you care about.
What's the best way for folks to reach out to you, Mark? I know we have accredited investors, high net worth individuals tuning in to the show, and they might like to have a conversation with you about how you could help them build that generational wealth in a much better way than they have been. What's the best way to contact you?
Well, I think I'll give you our corporate phone number. It's area code 973-422-9140. Or you can reach me at Mark_Murphy, Mark with a K, Mark_Murphy at northeastprivate.com.
Awesome. That'll all be in the show notes. Mark, thank you so much for inviting me and for joining me here on the show. It's been. Thank you for inviting me to come along, Mark. I really enjoyed being on your show. Thank you so much, Mark. Thank you.
Thanks, Jay. Appreciate it.
If this episode, my friend, has changed the way you think about money, or changed the way you think about capital, or trust, or building multi-generational wealth, then don't let it stop right here. What my guest Mark Murphy shared today is not theory. You could tell that. It's how serious investors think when they're building wealth that actually lasts. And it's the difference between chasing money and actually attracting it. So if you know someone that's raising private money, wants to raise private money, or is looking to deploy some money, or someone that's about to lose years learning all this stuff the hard way, do them a favor and share this episode with them. And if you want to have more conversations like this, like, share, subscribe. You're watching on YouTube, click that bell. Be sure and follow me. Real Operators, Real Strategies, Real Capital. Make sure you follow Raising Private Money so you never miss another episode. I'm Jay Conner. I'll see you right here on the next episode of Raising Private Money.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.